Hey everyone, welcome back to Corporate Decoder. Today BV Financial is filing its current report and I am seeing a clear signal about their latest financial performance. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just announced its second quarter results and there is one key number that tells us a lot about their recent health. Alright, so here we are looking at BV Financial Incorporated's latest filing. This is essentially a quick update to the public about important company events. The earliest event they are reporting on here is the 24th of July 2026. This is the day they released their financial results for the quarter that ended on the 30th of June of this year. The company itself is BV Financial Incorporated, which is the parent company for Vanguard Bank. Now, publicly traded companies like BV Financial have their stock listed on exchanges. Their common stock with a par value of $0.01 per S-share is traded under the symbol BVFL on the Nasdaq Stock Market LLC. It is interesting to see that the company has checked the box indicating it is an emerging growth company. This means they can take advantage of some relaxed reporting rules compared to larger, more established companies. This is a common strategy for smaller, growing businesses. The main point of this filing is to tell us about their financial condition and how they performed in the second quarter of 2026. And they've done this through a press release which is attached as an exhibit to this filing. This is where we find the actual numbers that matter. The news headlines from around that time confirm this with statements like BV Financial Q2 net income rises and BV Financial reports Q2 net income $3.5 million. Adjusted diluted EP $0.47. This exhibit 99.1 is the key here, as it contains the nitty-gritty financial details. While the filing itself is brief, the press release is where the story unfolds. The headline news on the 24th of July indicating BV Financial pays off $35 million in bank borrowings. Buys back shares also gives us a hint about their financial maneuvers around this time. This suggests they were actively managing their debt and returning capital to shareholders. And signing off on this report is Michael J.D., the Chief Financial Officer. This confirms the authenticity of the information presented. Now let's dig into what those financial results likely showed based on the context provided by the headlines. The fact that their net income rose and they were paying off significant debt suggests a positive quarter for BV Financial. Paying down debt is a strong sign of financial health, as it reduces interest expenses and strengthens the balance sheet. Buying back shares can also indicate that management believes the stock is undervalued, or it can be a way to boost earnings per S-share. For a company like BV Financial, which is a regional bank, the ability to manage its loan portfolio, maintain healthy deposit levels, and generate consistent net interest income are crucial. The reported rise in net income likely reflects strong performance in these core banking functions. The market's reaction, as seen in the headline BV Financial, Nasdaq, BVFL trading down 2.7%. Here is why, on the 21st of July, prior to the earnings release. Might have been due to broader market sentiment or specific investor concerns that the earnings report aimed to address. Looking at the institutional ownership, we see significant stakes held by large players like AllianceBernstein LP BlackRock Inc. and Vanguard Capital Management LLC. This indicates a level of confidence from major financial institutions in the company's prospects. A market cap of $177 million and a P/E ratio of 13.8 suggests the stock is trading at a reasonable valuation, especially if earnings continue to grow. The story here is one of a regional bank demonstrating financial stewardship. They are actively managing their liabilities by paying down debt, and they are also acting to enhance shareholder value through share buybacks. This kind of proactive financial management is often a good indicator for the future stability and potential growth of a company in the financial sector. The risk I am watching is how this debt reduction and buyback strategy aligns with their long-term growth plans, and if it impacts their ability to lend and generate future revenue. My biggest concern is whether the market's initial negative reaction before the report was a precursor to underlying issues that the earnings may not fully address. What I am actually looking for is sustained revenue growth and profitability beyond this quarter's positive results. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord community linked below.